Back time for top picks from Brendan Caldwell. Costco is number one. Brendan, ticker symbol COST on the NASDAQ, the big retailer.
I can see us talking in 5 months, Paul, just after Christmas, probably the last show of the year. And you're going to say, Brendan, your top pick from 5 months ago was Costco. And Christmas was all about luxury brands. How could you possibly have picked Costco? But so the retailers have actually been benefiting from the pricing power that they've got for the first time in a very long time. They're putting a bit of the squeeze on their suppliers. So in many cases, the manufacturers are not able to raise the prices as much as the retailers are, and you're getting some margin expansion. That said, you're getting a bit of an inventory buildup where things aren't moving off the shelves quite as much, even Costco and others. But the reason we like Costco is that they haven't had a stickiness to their membership. As you likely know, Costco, you be a member of Costco, get the card, and you get the premium card, and they can upsell you on the membership. Well, those memberships are actually a lot stickier than one would have thought. And the stock has had a bit of a pullback here, a bit of an underperformer, along with Walmart. But too, because of the membership aspect, we've preferred Costco. And in this space, we also own Dollarama here in Canada and Dollar General in the U.S. But as a top pick, Costco COST.
We've had a lot of negative news over the past several months from a couple of other giants in U.S. retailing. Target and Walmart have been serial offenders, if you want to call it that, in terms of bringing bad news to the marketplace. Why do you see Costco differently?
A down market aspect is part of it. The membership aspect is part of it. So Target's a little bit higher end store. If we're going into recession, people still need to get their laundry detergent. They still need to get their basics. So they may be going to a cheaper, they may look to buy in bulk. Now, so there are a few different aspects to it, but the membership, down market purchasing, I think, and the fact that Costco has already had this pullback, hopefully between now and the time we talk just after Christmas, we'll have seen a bounce back in this sector.
Okay. Top pick number two, LKQ, a company I'm not familiar with, but it is a supplier of auto parts.
Yeah, so it's North America's largest supplier of aftermarket parts. And this is a theme for us. The auto business, as you know, has been under a lot of pressure for new cars have been hard to find. They're by appointment only, buy a car. Now you may get it in 6 months. The price of used cars is going through the roof. So this collision shops and aftermarket dealers have been in particular demand. This is the leading supplier, and we just think the profitability has been strong. The stock's been doing well. I think this trend is likely to continue. Yes, auto companies are being able to get a little bit more of new cars coming, but I think it's going to be a while. So again, I think between now and Christmas, you'll see continued strong performance from this one.
Okay, there's the street consensus on LKQ: 9 buy ratings, 1 hold rating, 1 sell rating. Finally, Electronic Arts, to the world of video games we go.
Yeah, this is a bit of a tough one for me. Like they say about cannabis, how there's medical uses for it. Okay, sure. So with video games, they're saying it's not about some guy just alone in his basement. There's communication. There's a whole virtual world, and where people are communicating, and this is how the younger generation is building connections and building friendships. Okay, sure. So on a philosophical basis, what I'm saying, I have a bit of a hard time with it, but I'll buy the argument for the moment. But what you're seeing is this growth in video games. Electronic Arts is the lead. They have some of the best brand names in the business. And then, as you may know, though it's not been my personal experience, when you're on these video games now, it's not like when we played Pac-Man or Space Invaders 40 odd years ago. It is interactive. You can pay up within the video game to get better equipment, better look, better everything. It's really the beginning of the metaverse. All these metaverse stocks have had a big, even Meta itself, come off considerably. But I think there is an area of growth in this virtual world of which Electronic Arts is probably going to be one of the prime movers that, again, I think between now and Christmas, there will be a lot of sales and they will do very, very well.
There have been lots of changes in this sector, of course. It wasn't that long ago that people would go to, in Canada, EA Games, or in the U.S., GameStop, and buy a physical...
Yeah, whatever happened to GameStop anyway? Sorry, go on.
And buy a physical game. That surely is not the way it plays out anymore. It's not the way my son watches video games. He downloads them, of course, from the internet or subscribes to a live service. You feel EA obviously is not a legacy player in this segment.
Oh, no. It's very much what you described there. Any more than the movie business, ended when their video stores went out of business. Netflix morphed into something that was 100 times bigger than Blockbuster ever was. So you're going to see a shift. And if you think about it, where you're constantly being prodded to upgrade this or that and the other in the game, you don't even have to leave your seat, is a better business model. Or if you've even still got a subscription model, and to bring our conversation right back to Rogers Cable, if you're providing it to your customer right there in his seat, it's a lot easier than having to get up in the middle of winter and go across the street or down to the Eaton Center to buy the game. So yeah, it's a better business model, and one I think that's just in its infancy.
Okay.